These are the 10 worst cities in America to buy a home in 2022. These are cities where the housing bubble is raging. Home price growth is out of control. There's no homes available for sale, and worse yet, these are cities where a big housing crash is coming over the next year. If you live in one of these 10 cities, you better buckle up for a roller coaster ride, because all of the appreciation and growth that these areas has experienced over the last 2 years is going to turn into a massive crash very, very soon, starting in 2022. Our number 10 worst city to buy a home in America in 2022 is a place that actually, for a very long time, had a very affordable and balanced housing market. Long-term home price growth in this metro averages only about 3 to 4% per year. However, in the last several years, that figure has exploded to 10, 20, and even 30% appreciation over the last 12 months. That's the definite sign of a housing bubble in Dallas, Texas. The Dallas-Fort Worth metro area, particularly in hot suburbs such as Frisco, Plano, and Prosper, is absolutely on fire right now. Prices are exploding and there is nothing available for sale on the market. Data from Realtor.com shows that there's only 4,100 active homes for sale across the DFW metro. That's a massive 70 to 80% decline in inventory from what we saw before the pandemic. What that means is if you have the unfortunate position of being a home buyer in the Dallas-Fort Worth metro in 2022, you have to contend with the fact that there's basically no homes available for sale and that you're going to have to compromise significantly on the home that you end up with. This is by far one of the biggest dangers of being a home buyer or real estate investor in a market like Dallas right now, as well as the other cities that I'm going to show you on this list, is that you are likely not going to be happy with the home you buy, and you're going to be compelled to sell it in 2, 3, or 4 years when the market is heading into a crash. Do you want to be in that position? I don't think so. Our number 9 worst metro to buy in 2022 is a place where if a home comes on the market, it does not last long. According to Realtor.com, the median days on the market for a home in this city is only 15 days. So that means after a listing lists, 15 days later, basically 2 weeks later, it's already sold and under contract. That's the 3rd lowest time on the market of any metro in America in Huntsville, Alabama. Huntsville is a market that's no doubt gaining in popularity among home buyers due to its affordability and surprisingly vibrant tech scene. Huntsville is a top 10 employer for software developers in America, largely due to a big economic cluster surrounding aerospace and defense. The result is that over the last 2 years, the typical value of a home in the Huntsville metro has ballooned from under $200,000 to over $280,000. 43% appreciation rate over only 2 years. I personally know quite a few home buyers and real estate investors looking in Huntsville right now, and not only do they have to deal with homes getting snatched off the market in 15 days, there's very few homes on the market to begin with a nearly 70% decline in homes for sale over the last 2 years. Our number 8 worst place to buy suffers from very similar perils to Huntsville in terms of low days on the market and inventory, and it's also located in the southeast. However, this is a place that has a lot more of a long-term track record. In this metro area, there's a lot of tourism, there's a lot of people who own vacation homes, there's also a lot of people looking to retire in Charleston, South Carolina. The center of Charleston, as well as nearby suburbs such as Mount Pleasant and Johns Island, have become a popular destination for home buyers and vacationers since the COVID pandemic started. That's one of the reasons that long-term home price growth in Charleston has averaged nearly 6% per year over the last 25 years, and that over the last 12 months, it's lurched up to nearly 26%. However, anyone looking to buy a home in Charleston today should be warned that there's a lot of historical volatility in Charleston's housing market, and don't be surprised if home prices go down by 10 to 20% over the next several years as the housing bubble phase moves into a housing crash phase. The timing of that crash is going to be heavily dependent on when more inventory starts hitting the Charleston housing market, because right now there's no inventory. According to Realtor.com, there's only 690 homes actively on the market across the metro compared to over 4,000 prior to the pandemic. We're unlikely to see a crash in Charleston until those inventory levels start ticking up. However, that increase in inventory could happen sooner than you think, because home builders in Charleston have pulled over 6,000 permits for new single-family homes over the last 12 months compared to the existing inventory level of 700. That means we could be seeing a pretty sizable spike in inventory coming to Charleston over the next 6 to 12 months, which means maybe you should wait to buy. Now, before getting into the rest of this list, so you can understand whether your city is one of the worst places to buy in America right now, I want to let you all know what scares me about basically all of the metro areas on this list, and it's this. I think they are in massive housing bubbles, a lot of them, and that they're going to have a big housing crash. That's because the crazy demand we're seeing in these markets right now was driven heavily off temporary factors that came to be during the pandemic. The combination of remote work and people fleeing lockdown states led to a lot of these metros on this list having a temporary increase in demand in their housing market, which has pushed prices way up and inventory way down. The problem is this was never going to be a sustainable situation, and now that we're seeing a return to work, more companies are demanding people come back to the office. Now that we're seeing the pandemic normalize, we're going to start to see demand in these areas go down just as new supply and inventory hits the market, which will cause a massive housing crash in many of these cities. No area fits this description better than our number 7 worst city to buy right now. This is a pandemic darling market, a place that basically no one was paying attention to before 2020, but now is a place where home prices are up by, get this, nearly 40% in the last year in Port St. Lucie, Florida. Port St. Lucie is located just to the north of West Palm Beach in Florida and was always viewed as kind of a tertiary location where a lot of retirees went and maybe some real estate investors picked up some homes. But since the pandemic started, Port St. Lucie has now become a destination for people fleeing states like New York and has attracted even more speculative real estate investment. You can see that historically home prices in Port St. Lucie are very volatile. The typical value of a home is now up to $362,000 across the metro according to Zillow. That's even higher than the $278,000 it registered at the peak of the previous bubble in 2006. What's extremely scary about that is home prices then declined by 55% in Port St. Lucie from 07 to 2012. So now that we're reaching even greater home price growth in 2022, that's got to be a big warning sign for any home buyer or real estate investor looking in Port St. Lucie right now. If you buy today, you're likely buying at the peak of a massive bubble that's going to see a big drop in prices in the coming years. Now, our number 6 worst place to buy in America right now is very different from pretty much all the other metros on this list. While most of this list is located in the south, this is the one northeast metro area that managed to slip in due to its ridiculously low inventory levels and very low days on the market. The typical home is sold within 12 days after it's listed in this metro, the second fastest level in America, which means that homes are quite simply flying off the shelves in Manchester, New Hampshire. The Manchester metro area, which includes the city of Manchester as well as the city of Nashville down to the south, has been a direct beneficiary of an urban exodus from Boston since the pandemic started. This has had the impact of making Manchester one of the most competitive housing markets in America. Inventory levels are in a death spiral over the last 4 to 5 years, and according to Realtor.com, there's less than 200 homes actively available on the market to buy. Once again, this means that if you're a home buyer in Manchester, you likely are not going to be able to find a home that you truly like, and that if you do go under contract and purchase a home, it's likely that you're making a big compromise and will want to sell that house in 2, 3, or 4 years when you've outgrown it. That could be a big problem because you could be selling into a very bad housing market that's in the midst of a crash. Now, our number 5 worst place to buy is quite legitimately on fire right now. Lots of people are moving into this metro from all over the country. Lots of remote workers are hanging out, trying out this city, deciding whether they want to stay. That means that not only are home prices way up in this area, so are rental rates in Tampa, St. Petersburg, Florida. The average rent is up by nearly 30% year over year, while home prices are up by 31% year over year, both heavily due to a massive influx of people moving to Tampa, especially from the New York and Midwest areas of the country. You can see that the 31% appreciation in Tampa over the last year now eclipses the 25% that occurred in the mid-2000s. That's got to be a bit of a concern because we can see there was a massive housing crash in Tampa that followed, lots of ups in prices and downs in prices. Now we're in another upswing, which means that very likely prices will be going down in the near future as a result. For those price declines to start occurring, we're going to need to see the pitifully low inventory levels of Tampa, which are currently about 3,000 homes on the market today, return closer to the typical 15,000 homes that were on the market prior to the pandemic. And while that's a big gap to fill, the thing you should know about inventory is that it can go up just as quickly as it went down. As soon as the investor speculation in the market subsides and a lot of people who bought homes for profit decide to sell, you're going to see inventory start to go up. That's likely to occur just as home builders are starting to deliver a big surge in new homes to the market. Tampa, probably more than almost any other market on this list, has been positively stimulated by the developments of the pandemic, especially remote work and people fleeing states like New York. If these trends were to moderate and if people were to start going back into the office, and let's say a city or state like New York gets its act together in terms of its economic policy, I believe the housing market in Tampa could suffer as a result. Now, before getting into our top 4 worst cities to buy in 2022, we need to talk about the role that higher interest in mortgage rates is going to have on the housing market, particularly in these cities. Because I think the higher interest rates we're seeing and the big surge in mortgage rates from a 30-year fixed rate of 3.1% in December to 4.5% in March is going to have the biggest negative impact on speculative housing markets that don't have strong fundamental local demand. What that basically means is that if you're buying in a city or live in a city that's banking on tons and tons of people moving in and where locals can't afford to buy the homes and where, there just seems to be an endless stream of cash investor buyers, those are the exact type of markets that are going to get crushed by higher interest in mortgage rates. Not so coincidentally, back in 2018 and 2019, when interest in mortgage rates went up last, it was these 10 cities on this list that were most negatively impacted by that. Most of these housing markets were not doing well in 2019, something you should remember if you live in one of these 10 cities. Now, let's get into the top 4. Continuing with our Florida theme. As you can tell, everyone, Florida is an absolutely crazy housing market right now. This metro area actually has one of the oldest homeowner populations in America. It's been a destination for retirees for the last several decades, especially over the last 2 years since the COVID pandemic began. This deluge of retiree buyers to go along with a huge influx of investors has made Sarasota, Northport the 4th worst city in America to buy a home right now. There's absolutely no inventory on the market, only about 1,000 homes according to Realtor.com compared to about 8,000 homes typically prior to the pandemic. That means if you're buying in Sarasota or Northport, you're likely compromising big time on the type of home you buy. Meanwhile, home price growth and appreciation after being fairly low directly prior to the pandemic has boomed to 39% year over year through early 2022. That's even higher than the 31% that was experienced at the peak of the previous housing bubble in the mid-2000s. That means you need to be very careful if you're buying in Sarasota right now. It's a very historically volatile market where prices went down by 40% in the last housing crash. I believe another crash is on the way because not only are prices way disconnected from local fundamentals, home builders are going nuts. There have been 11,000 single-family permits pulled in the Sarasota Northport metro over the last 12 months. That's compared to 1,000 homes actively on the market currently. You can see that very quickly we might be seeing a lot more inventory hit the market in Sarasota. Now, our number 3 worst city to buy in 2022 is a place that, again, like Dallas at number 10, was always historically affordable. This was never really a market that really had a big housing boom or a housing bubble. The typical home price went up by about 3% a year, maybe 4% a year, and then wham! Value growth has surged to 30% year over year, according to data from Zillow, when Nashville, Tennessee never did more than 10% year over year in the previous 2 decades. Nashville is kind of becoming an Austin 2.0. It's a market that a lot of Californians are starting to move into. A lot of real estate investors are snatching up homes and flipping them and renting them out. And that's making it a very speculative housing market, something that's very new for Nashville's history. I believe that this means it's likely a bad time to buy in the Nashville housing market because you're buying at the peak of a housing cycle in a market that there's a lot of speculative demand and where home builders are going nuts. More homes are built in Nashville than pretty much any other area in America. Builders have pulled permits for nearly 30,000 new homes and apartments over the last 12 years, which means that if there's any slight drop-off in migration or investor demand in Nashville, we could be seeing a massive surge in inventory very, very soon. Until that happens, however, expect a competitive market. The typical home that goes on the market in Nashville sells within about 16 days. That's one of the fastest sales velocities in America, which means that if you want to buy in Nashville right now, you better bring your checkbook to the open house. Now, our number 2 worst city to buy is even worse than Nashville in terms of how crazy the current market is. This is a place where, if you can believe it, home prices have gone up by nearly 70% over the last 3 years. That's the highest price appreciation in America, and it's actually one of the best performances by a housing market in U.S. history. Where am I talking about? That would be Austin, Texas. A combination of young professionals, tech engineers, and confused hipsters have flooded into the Austin housing market over the last 3 years, pushing the typical price of a home up from $340,000 all the way to $570,000. This type of home price appreciation is very new for Austin. If you look over the last 25 years, the average year saw 3.7% appreciation according to Zillow, and now we're at 45% over the last 12 months. I believe that this makes Austin, Texas arguably the largest housing bubble in U.S. history. No city has ever eclipsed the 40% year-over-year price growth mark and not had a crash. The last time any city did this was Phoenix and Las Vegas in 04-05, and values went down by 50% in the subsequent crash. I don't think they're going to go down by 50% in Austin. However, a 30% decline seems very reasonable. And to give you all some personal perspective, I actually lived in Austin for 15 months from August 2020 to October 2021. And I can tell you that the people I know there, many of the people who are looking at buying a home in Austin, are now leaving to go to other cities around Texas and other parts of the country. The Austin boom is over. You haven't seen it show up yet in the housing market, but it will probably in the next 3 to 6 months. Now, are you all ready for our number one worst city to buy in America in 2022? This is a place that I wouldn't touch with a 10-foot pole right now. This market is in a big bubble. There's no inventory, and you're doing yourself a big disservice if you elect to buy right now in our number one city. But before getting into that, I want to hear your feedback on this video. Leave a comment below and let me know what you're seeing in your housing market, especially if you live in one of the cities on this list. Are you trying to buy a home, or are you saying, no way, the bubble's going to crash and I don't want to be there for it? Let me know in the comments section below, and also make sure to smash that like button to show your appreciation for this video. All right, everyone, now to our number one worst city to buy in America in 2022. This was a place that I had to do a double take on. When I initially looked at the data, I was shocked at how few homes are currently on the market. There is, get this, an 84% decline in inventory over the last 2 years. The amount of homes on the market has declined from about 4,200 before the pandemic hit to only 700 on the market today. That's unbelievable. Meaning that if you're a home buyer in this metro trying to buy a home right now, there's legitimately nothing out there in Raleigh, North Carolina. Raleigh, much like Austin, is a place that's benefited a lot from the pandemic, as well as the huge boom in tech in America over the last half decade. Apple is building a big regional headquarters in Raleigh, while Google is also expanding their hiring in the area, and that has drawn in a lot of people, especially from California, who bring their big budgets from places like San Jose and LA into a market that historically had very low and affordable home prices. Check this out, everyone. From 1996 to 2016, the typical value of the home in Raleigh only appreciated from $165,000 to $230,000. That was less than 2% per year annual appreciation. However, since then, over the last 6 years in Raleigh, home prices have nearly doubled. Raleigh, as well as Durham to the northwest, are absolutely nuts right now. And if you're someone who's looking to get into this market today, I would caution you against it, because chances are you're going to be banging your head against the wall and frustrated by how little inventory there is on the market and how high home prices have gone. Data in this video came from two principal sources, which are both free and publicly available to use. Zillow has home value data for your city and metro area over time, while Realtor.com has data on inventory and listings. If I didn't cover your city in this video, check the links in the description so you can download the data for yourself from Zillow and Realtor.com.